Hello and welcome back. Matthew Grant here, and crikey, it has been a long time since I had a chance to take on this slot introducing the podcast. And well, I'm here now because we are trying out a new idea today. So Jonathan Gonzalez, founder of Raincoat, has been on a couple of previous podcasts, and for someone that only discovered insurance in the last few years, he and his company have made fantastic progress. Now you can hear Jonathan's story about why a family disaster caused him to launch a parametric insurance company on episode 183, which we recorded in March 2022. This week, though, Jonathan joins us as a guest host. So I'm going to be handing over to him in a few minutes as he talks to Carolyn Kousky. Now, we also spoke to Carolyn last year for episode 243. Carolyn is widely recognized for her knowledge of risk insurance and catastrophes. She had roles at Wharton Risk Centre, and today she's at the Environmental Defence Fund. But Carolyn is also founder of Insurance for Good, of which Jonathan is on the board. Now, it's a real pleasure for me to be in the audience for this recording, and I know that you too will enjoy it.
I'm really excited to be talking to you today, Carolyn. For those of you who don't know, Carolyn Kousky is acting chief economist at the Environmental Defence Fund. She's had an absolutely incredible career examining multiple aspects of climate risk management and policy approaches for increasing resilience. She is the author of Understanding Disaster Insurance, New Tools for a More Resilient Future. And she has published numerous, and I mean numerous, articles, reports, and book chapters on the economics and policy of climate risk and disaster. She is the vice chair of the California Climate Insurance Working Group, a member of the Federal Advisory Committee on Insurance at the U.S. Department of Treasury, a member of the high-level advisory board on the financial management of catastrophic risks at the OECD, a university fellow at Resources for the Future, and a non-resident scholar at the Insurance Information Institute. And she was previously executive director at the Wharton Risk Management and Decision Processes Center at the University of Pennsylvania. It's an absolutely incredible CV. And just as an anecdote, Carolyn's articles were actually some of the very first I ever read about parametric insurance. She was writing about this way before it was cool and was actually one of the reasons why Raincoat exists today. So thank you for that, Carolyn. And I'm just really excited to have you here. So I wanted to start off with a topic that is often mentioned a lot within the context of insurance, and that is the natural disaster insurance gap. And it's often referenced both in context of public sector, talking about the growing problems, but also framed as an opportunity for the private sector. So I want to start off with, what is the gap and what can you tell us about it?
Great. Well, let me start, Jonathan, by saying thank you for inviting me to be here and talk to you about these topics. It is our conversations and collaborations that have always been an inspiration to me and always taught me new things and shaped my thinking in this space. So always enjoy dialoguing with you. Yeah, so let's focus on the disaster insurance gap. Swiss Re estimates that about 2/3 of economic losses from disasters are uninsured globally. So that's essentially what people are referring to when they say the disaster insurance gap. It's like what share of damages aren't covered by insurance. But I think those high-level global statistics make it harder to start thinking about policy solutions or what we might do to start closing that gap, because actually the gap varies quite a bit depending on the location, the country, the geography, the peril, socioeconomic variables, and the type of economic loss. So let's maybe unpack it a little bit more. We see that even in even in countries with very well-developed insurance markets like the United States, there still exists a big disaster insurance gap. So even when we have coverage for lots of other types of perils, people are often uninsured against catastrophic losses. And you see that recently with the storms that the U.S. experienced in the Southeast, hurricanes Helene and Milton, and there was extensive flood damage, and very few of those people had flood insurance. But part of this is an institutional question because fire coverage and wind coverage is much more widespread because those are included in our standard property insurance policies, which are required for anyone who has a mortgage and generally held on to in the United States. So the governmental systems of insurance and mandates from government or lenders also influence how much people have insurance. We also see that the insurance gap varies a lot by income and that lower and moderate income families are a lot less likely to have insurance than more affluent households. And that it also varies by type of economic loss because in most developed countries, at least, the standard insurance policies tend to focus only on property damage. And so non-property types of losses are also not covered.
Yeah, and I think that last point is one that I usually like to reference because oftentimes when people think about climate disasters or insurance gaps, it's actually kind of crazy how immediately the thought is property. Almost like if property is the only thing that's affecting basically people when it comes to these disasters. And I've lived these experiences myself. A great example is in the case of a place like Puerto Rico, where about half of the population doesn't own property. It's crazy, and it would be insane to say that half of the population is immune to hurricanes. No, they are very much exposed to hurricanes, but there really isn't anything that would cover their disruption after these types of events.
Yeah, I think that's a really good point. Our colleague and I did some research recently where we looked at the financial recovery of households after landfalling hurricanes and saw that a very large share of losses, exactly like you're referencing, are non-property. It's things like having to pay higher rent after a disaster because supply goes down and demand goes up. It's things like having to buy a generator and fuel when you lose power for long periods of time, higher commuting costs when our transportation infrastructure is damaged. We saw that up to half of those impacted lost income due to business interruption. And, people don't have insurance against that either. So, yeah, lots of economic loss that's just not covered right now.
So something that I've always kind of wondered about this topic is you see this conversation coming up in so many forms. And for the last couple of years, I've seen it accelerating where the natural disaster insurance gap is just normally like a headlining topic. But why do you think it's been so slow to find some real sustainable solutions for this? Because sometimes I feel like there's a lot of talk around this topic, but then there really isn't that much progress when it comes to actually chipping away at it. Or maybe there's some data that I'm not looking at, but do you have any insight with that?
No, it's been such a problem for so long. And I think there's two reasons that are just very difficult to find our way around or to find solutions for. One is that disaster insurance can be expensive in high-risk areas, and we quickly run into affordability problems where the price that disaster coverage can be offered profitably in the private market is just more than people are able or willing to afford for disaster coverage. And that feels intractable a lot of the time because you can't have the private sector offering policies at a loss, obviously. And there's been, at least in the US context, reluctance for any sort of government subsidy for insurance. We see that it's quite different in other countries, right? If you look at the disaster insurance systems in places like France and Spain, they have systems where everybody pays a flat fee for coverage. There's kind of a federal backstop, and they call it solidarity pricing. And in the US, we really want risk-based pricing because we believe in the information and incentives that it provides. But that makes it, I think, more difficult. So I think how we handle this affordability piece is one really difficult challenge with the disaster insurance gap.
So let's say we were trying to address that affordability issue, because here's an interesting topic that I normally hear within the context of parametric products. There's two schools of thought. There's a lot of people that say that parametric products are more affordable. And then there's a lot of people that say that they're more expensive. I would say in practice, they're more expensive. Like really, what makes them affordable is the fact that you can tailor the product to be much more specific, much more precise on what you're trying to address, right? Or trying to ensure. But I've had this pushback before of, well, what happens if things just become impossible to insure? Like realistically, what are people supposed to do if you run up into a situation that it's truly uninsurable at that point?
Yeah, that's such a good question and becoming more urgent. I mean, I think that we need to be doing a lot more to center the type of loss reduction, by which I mean how we build our land use decisions, and making sure those decisions are made with questions of insurability at the forefront, and not just insurability today, right? Since we have changing risk, many natural disaster perils are just getting worse as the planet warms. We need to be thinking about the life of those buildings and how high the risks are going to go. Because, I mean, at some point when the risk's super high, you're out of options, right? So you have to pay that cost of risk. So I think that's an important thing, is to think about how to draw tighter links between those important decisions and insurance, and maybe places where insurance could help, like supporting more resilient rebuilding, for example. But I also want to come back to what you said about whether parametric is, more affordable or a solution or not, because I think you're right that, so they're paying high premiums for a policy that's not covering the actual economic needs they face post-flood. And so this is a community where a parametric that was, say, $20,000, $10,000 to cover whatever the costs were would be much more tailored to their loss and presumably cheaper than paying for this large indemnity policy that's not really meeting their needs. So I think those are the solutions that we need to start finding.
I think there's a couple layers that are relevant, right? One of them is, can we even measure the risk of one of these things, right? One of the benefits, right, of parametric products is that you have a lot more control, right, over what you're insuring. With that control, there's a big responsibility, right? Because now you introduce significant basis risks that you then have to manage, but the control is there. And that's why I'm very optimistic that at least a more parametric world is one where we can insure a lot more things because you have a lot more visibility into the risks that you're actually covering and for what for. There's also a second thing, which I've always found very fascinating, just psychologically, that happens when a person engages with a parametric product. And we've seen this, let's say, in some products in Puerto Rico, where once people know that there's this insurance policy that's going to pay a certain amount that they expect, they start to very actively engage with lowering their exposure to make sure that their loss is not larger than that number in a very direct way, which is really interesting because one of the things that I've kind of experienced with past disasters is sometimes people attribute powers to insurance, or in the case of the US, to FEMA, that aren't actually there, right? Like they just assume that insurance and FEMA is going to solve things, but then not quite, right?
Yeah, absolutely not quite. And I think anything to help people recognize the active steps they need to take in managing their own risk is really critical. And I think actually maybe to just back up for a second, this is also why filling the disaster insurance gap is so important, is that FEMA is not going to bail you out. There's not enough. They don't give enough money to households to get them back to full recovery. Most households, most Americans do not have close to enough liquid savings to cover the damages on their own. Lots of people can't take on additional debt after a really damaging storm. And so without insurance, financial recovery is really difficult for most people. And so figuring out how to solve this and make sure they have the financial protection they need is really critical for household well-being and community well-being too.
Absolutely. Which I think is a good segue into this new topic, which is that initiative that you're working on. Today was actually the announcement. Not sure when this podcast will come out, but let's talk a little bit about Insurance for Good. What inspired you to found this new nonprofit and what you hope to solve with it?
Yeah, I'm really excited that today we launched Insurance for Good, and I couldn't be more thrilled, Jonathan, that you are on our board and helped get us to today. So the idea for Insurance for Good actually came about several years ago when we were realizing that these conversations were taking on a new level of urgency. And there was a lot of talk about these possible solutions and what might work, but no common place to learn about them or understand or figure out what had been tried and what worked and what the lessons were. And we were also seeing lots of new stakeholders to the insurance conversation, people who, because of growing risk and challenges with the private market, were having to think about insurance and the insurance solutions that before had the luxury of ignoring it and not really thinking about it. But insurance, as you know, is not always the easiest topic to get into and to understand the dynamics of. So we wanted a place where people could come to learn about insurance and concepts, things like understanding what parametric solutions are and what they can and can't do, and also to keep track of all the interesting innovation and new work that was going on without having to find, the 20 different organizations and different websites. And so to pull it all together. And so that was the first piece about Insurance for Good, is to pull this together into a hub for this growing community of practice and to do a lot of education and capacity building. And then we're also excited to start moving into helping communities with that innovation work. Some of the solutions we've already started talking about, how to get them tailored for needs and then actually get them not just from thoughts and good conversation, but implemented on the ground in reality. And then the third piece of Insurance for Good is going to be thinking about the policy and regulatory framework and making sure we have a policy and regulatory framework that enables the type of solutions that we need. So we're very excited to get started.
I'll give an example on that last one. I remember a couple of years ago, we were talking about insurance policies in Puerto Rico. And one of the things that we realized is that, for example, to get property insurance, you need to have a title of your home, right? And what happens with people that have lived there historically for a very long time and don't have titles for their homes, right? So there's actually all these little nuances when it comes to public policy that can really affect negatively these types of programs. I know that, for example, in the New York program that you mentioned, there were some aspects of this related to just regulation. Is it insurance? Is it not insurance? What does the law say? I don't know if maybe you can talk a little bit more about how some of these things can really be a significant roadblock to actually get a solution out the door.
Yeah, it's true. When you're trying something new, I feel like you run into constant unexpected challenges, and you really have to have the persistence to stay with it and then pave the way, hopefully, for others to follow. With parametric solutions, I think these regulatory questions are becoming a bigger challenge. So parametric, since it pays out based on an observable measure of the hazard and is not exactly indemnifying the estimate of your property loss, many jurisdictions in the US are saying that's not insurance. That's not the definition of insurance. And then that makes it a financial product. But I think globally, having it be a financial product maybe hasn't always been as much of a challenge. These can just be executed as derivatives or other things. In the US, it's a little bit more difficult, I think, not having it as an insurance product when you're using it like one, because it confuses consumers and it also puts it into a regulatory framework that is not about consumer protection or the things that you might expect from insurance regulation.
Parametrics are interesting because they look really simple, right? But then there are lots of nuances that come into this. And those nuances can really impact the quality of the solution and whether there is a right approach or not. You can technically build a parametric product for just about any price point and for just about any limit. The only thing you have to do that is just put some insane attachment points, right? Like put a really crazy event, something that historically is never going to happen. And then it's going to be a really affordable product with a really large limit, but then a very small premium. So these are the types of things that, as you were mentioning, Carolyn, like if you are in public office, right, or you're trying to engage, let's say you're a nonprofit, you want to set up a program, all of a sudden you realize that there are all these little technical details on how to set it up, how to run it, where are the boundaries that I can operate in, all this terminology that you probably have never heard of. And it can be a really huge learning curve.
Yeah, absolutely. And that's something we hope Insurance for Good can help with, is to accelerate and fill that learning curve. But yeah, and I think it's one we have to focus on quickly, because there's been a lot of experience globally with thinking about parametric products that are sort of lower coverage limits to help maybe lower income populations or places where you don't need as much. But there's also growing excitement about how parametrics could help with other climate related risks that are getting harder and harder to address as risks go up. So I'm thinking things like local governments using parametric coverage to help with their own post-disaster liquidity and other types of applications like that, which also are going to need the same kind of regulatory treatment to make sure that, that solutions can come to the table.
So if you're a person from the private sector listening to this talk, particularly those aiming to address aspects of the natural disaster insurance gap, what would you suggest should be their role? Where do you see the biggest opportunities? And what would you suggest?
Yeah. So a lot of my work has been focused on types of risk transfer solutions that have a lot of social or environmental good. And I think those are exciting. But because a lot of the benefit is spread across society, it can be harder to figure out how to get those solutions going, because they might be slightly lower profit margin. They might be totally different, and innovation takes time and resources, like we were talking about. So I've been most excited about thinking through partnerships between the private sector and the public sector, or the private sector and community groups, where there can be some collaboration on that intensive period of innovation and concept creation, so that that's shared and also really meets needs. And then the private sector can get guidance on which types of these solutions might have the biggest demand and actually be most helpful on the ground. And that's what we did in New York City. And I'm hopeful that that can kind of replicate and let each sector play to their own advantage, as it were.
Absolutely. And I think one of the things that is super critical is that collaboration across the value chain of insurance, because some of these solutions, as you know, are very like multi-layered, right? There are aspects of adaptation, there are aspects of resilience, there are aspects that are financial, right? In the case of there's a financial instrument. And it's very hard for a singular entity to have the answers for all of these topics. But it's very clear that when we're looking at some of these very large systemic problems, you need everyone to come together to kind of solve for it.
Yes, I couldn't agree with you more. And there's so many flavors on that, right? I mean, we were talking earlier about the need to make sure that housing is actually built in a safe way in order to have insurability. So right there, you're having partnerships that don't traditionally exist between people thinking about insurance and people thinking literally about construction, land use planners. But also, to your point, I think there needs to be more fitting together of the whole sort of disaster financing spectrum and where different insurance solutions fit. One thing I've been trying to wrap my mind around is that climate change is making a lot of weather-related perils more frequent, and high frequency risk is not well suited to insurance, right? It's really expensive to transfer frequency risk. And so I think that's another place where we need partnership, which is if we're talking about a coastal community that's starting to see tidal flooding many times a month, that's not an insurance problem. That's a risk reduction problem. But how do you sort of make sure we're doing the right community level risk reduction so that the more rare event that's more suited to risk transfer can then be insured? So how do you piece these together? And similarly, for households, insurance can be more cost effective if you can hold a higher deductible yourself. So that's fine for more affluent families to take a higher deductible. But are there other tools, like some states are starting to experiment with disaster savings accounts? Can those help provide that for a household? So I think there's lots of these, just like you were saying, conversations that are just beginning, and hopefully you're going to unlock different ways of piecing all of this together.
Absolutely. And recently, it's funny that you mention it because I was reading, these are kind of the geeky things I do in my free time. I was reading the history of insurance. We're just there are a couple books that I was meaning to get into. Yeah. And one of the things that blew my mind a little bit was I hadn't realized that fire brigades, right, or the concept of a fire department actually came from the insurance sector. It was really the insurance sector, the ones that really used to invest heavily in that. And now it became like a public good. But I think it's in line of what you're saying, where really the importance, right, of fire mitigation in London, right, 200, 300 years ago really was from the insurance sector saying, hey, we have to do these things. This is the change that's needed. And if we don't do this, we're going to run into some really big systematic problems.
Yeah, that's a really nice example. And I think we have a real opportunity right now for the insurance sector to lean into that maybe risk advising, risk prevention role, as more stakeholders are trying to figure out how to do that better and more effectively. And I think it would really help societal level conversations if we could take climate impacts from being a political conversation to being a risk management conversation, right? We know risks are going up. How do we think in smart ways about how to handle those risks and the impacts they're having? And what better group to lead that than insurance, who does the risk assessments and thinks about it? And in a lot of ways, I think people often think of them as society's risk managers. It's just that in the past, they've been in the background, and now they're in the foreground.
So, Carolyn, we've talked a lot about kind of the challenges and the areas where we think the private sector can be involved. But I guess I wanted to also ask you, what has you optimistic? Because you're one of the most optimistic people that I know when it comes to this space. It'd be good to get your sense of like, what has you optimistic, and also what are actionable things people can do today listening to this to get involved?
Yeah, that's a great question. And thanks for saying you think I'm optimistic. I think that's my coping strategy in the world. I look at some of the climate science and the way risk is escalating, and I get very nervous for humanity, to be broad about it. But what I think keeps me going and feeling better than worse is the fact that these conversations are happening, that there's a lot of interest and growing enthusiasm in finding paths forward that are just like we were talking about, that are not siloed efforts, that are reaching across sectors, reaching across disciplines, reaching across the political aisle to find things that work for people and that work for the planet. And I think with that amount of momentum and energy, we're going to find paths forward. That said, there's very much not a silver bullet solution in this space. I think it's a patchwork. It's going to be a quilt of all these different types of things that maybe share some similarities or other differences, but that kind of get pieced together. And so because of that, I think that we need a lot more testing and learning. So we need to take some more of these ideas to implementation. Maybe this is also facilitated by things like regulatory sandboxes or sort of policy trials in order to better understand, so that then we can figure out what works in what solution and for what in what context and for what population, and then start to really figure out how to scale those. So that would also be my ask of people. Join us. So come be a part of these conversations and solutions that Jonathan and I are in right now. And you can do that by reaching out. I'll say to either of us, Jonathan, I'm going to put you in that too. But and on the Insurance for Good website, we've started, you can reach out to us directly with ideas on how we can help, and also sign up for our email list where you can stay up to date on all the good work that's starting to happen.
Yeah, and just for everyone, the website is insuranceforgood.org. Should pop up also if you Google it. All right, Carolyn, it's been an absolute pleasure talking to you. I've had a lot of fun in this conversation. I'm going to let you go because I know you have a ton of things that you have to do, but it's been absolutely awesome.
Thanks, Jonathan. Thanks for having me. Always enjoy these conversations.
Well, I think you'll agree that experiment worked rather well. Now, if you're curious about what we are doing at Instech these days, then take another look at the website or go there for the first time, www.instech.co. We're taking things to a new level in a number of ways, including running a major 2-day event next year in March on catastrophes, climate and exposure management in London. Details of that on the website. Hope to see you there. And finally, if you are already working with us or you want to become a client and you'd like to try your hand at being a podcast host, then let us know. hello@instech.co. That's it. We're done.